Congress couldn't agree to repeal and replace Obamacare, and the Dow Industrial sold off modestly with the dollar sliding to an 11th-month low as investors lost faith in President Trump's economic reforms. However, the Nasdaq Composite and S&P 500 closed at record highs.
Let's start by taking a look at the weekly chart of the dollar index. We need to go with the weekly chart rather than the shorter-term daily chart because we're looking for evidence of a longer-term pattern here. The daily chart wouldn't give us enough data. What does Broden see in this weekly pictograph of the action in the dollar? Well, after its pullback in recent weeks, the Fibonacci Queen has spotted a number of signs that make her think the dollar could be ready to resume its longer-term rally. Now, that's not what we want to hear, not what a bull wants to hear because it's going to hurt earnings. But if I only told you what you wanted to hear, I mean, that wouldn't be all that insightful. Why does she think that the dollar's likely to move higher again, putting the squeeze back on American exporters? Okay, first of all, when you take a long view here, you can see that the dollar index has been making a pattern of higher highs, okay, and higher lows. More importantly, higher lows for quite a long time. As long as the dollar index holds above its lows from a little over a year ago in May, that's the only time that it violated. It came back to the low 90s. Then she believes it will ultimately resume its move up. Perhaps more important, Broden sees three major floors of support for the dollar index right here, all of which run from 95 to 96 and change. Given that it's currently at 97, there's no question that these support levels are indeed holding. As much as we might want a weaker dollar, the charts seem to suggest that it is not in the cards. This very contrary view, by the way. I feel a lot of people are thinking that the dollar's had its move and is over. But it's not just that Broden doesn't believe the dollar index has much downside. She also thinks that it's kind of due for a bottom. Why? Some of this has to do with the concept of symmetry that she studies. The idea here is that future swings in the price of a stock or a commodity or currency often tend to be similar in length to its past moves, hence symmetry. Now, I know it might sound like a bizarre way to predict the trajectory of any kind of security, but the fact is that it tends to work more often than it doesn't. When it comes to the dollar index, Broden points out that its recent decline has now lasted for 20 weeks, okay? 20 weeks since its peak right here. Okay, now let's think about this. That's very similar in duration to the past 4 declines, which have lasted from 21 weeks, okay, 22 weeks, 24 weeks, 22 weeks, you get it? Again, it may sound really glib to say, hey, the dollar index just dropped for 22 weeks last time around, so now we're 20 weeks into this decline. It's probably ready for a rebound. But that analysis would have actually worked the last 4 times. Can't sneeze at that. Hey, that's not coincidence. The reason Broden looks for symmetry in the charts is because it's so good at predicting when something is about to change its trajectory.